Hey, this is Jeff, the day trade mechanic. Not sure if this is going to get posted or not, but I'm having trouble pulling the trigger on selling covered calls in some of the stocks and ETFs that I own, and I wanted to review this with a little trick that a good friend of mine showed me on Thinkorswim charts. So I've got a position in this ETF LABU, and I need to sell some calls on it. I need to bring in some call premium. And I've got the chart set back to Monday, which would be April something. How about April 4th? 2022, by the way. So LabU had a pretty good 5-day run. It was up to around $19. It's basing up here, but it can't seem to break out. It's riding the 20, but it can't break out. So let's bring it forward one bar. And whoa, I guess this was the start of the day. This was Tuesday, because this dotted line here is the end of Monday. So Tuesday started out pretty well, and I'm thinking, I think this could go further, which would be great. Whoops. Well, I don't like that candle, so we're 30 minutes into the day now. Uh-oh. Hey, this looks promising. Rats. So let's back this off back to Monday again, and we're going to invert the chart. So just 1 second here. Okay, I've got this set back with the chart inverted now to the first candle on Tuesday. And if you'll note up here, I've got a minus sign in front of the symbol. So all the green bars are red, the red bars are green, and try that on. That'll get you confused. So what I'm looking for here would be a bottoming pattern to sell covered calls on, because I think I'm better at spotting bottoming patterns than topping patterns. So let's push this ahead like we did before. Now that's kind of looking like a bull 180. Bull reversal here. And yeah, I missed my chance to sell calls. Now as it comes back down, what I'd be thinking if I was wanting to go long or maybe sell puts on this, I'm thinking double bottom. But I honestly don't know what I was thinking on Tuesday when I had the chance to sell some covered call premium. And right here we've lost 50 cents, and on this product where I want to be well above the current price with call selling, I'm going to have to go out 2 weeks minimum, probably longer than that. The premium just dries up and goes away. Plus this product is pretty spready, and if you think you're going to sell the offer, forget it. The ball game was definitely over here. So let's bring this back to the regular chart. And this is Friday. This is yesterday, the 8th. So you can see that since Tuesday, we've just been straight down. So I just feel like I missed an opportunity to sell premium in LabU. Let's take a look at another one. This is TLRY, aka TLRY Dog. And unfortunately, I've got a position in this one as well. And this is Tuesday, the 5th. Well, I knew they had earnings coming up last week, but I wasn't for sure when. I thought the earnings were the 7th. Turns out the earnings were the 6th. So let's bring this forward. And we gap up and we fall back immediately on the first 15-minute candle Tuesday. But look at that. And I thought, I have totally screwed up and I've totally missed my chance. Well, for the next hour we were green, and we were right at $8, and we we couldn't really push over 815. It tried and it tried and it tried. And eventually it rolled over and the opportunity had missed. And I really, my cost in TLRY is 850, so I was right there, and there was some nice premium going out to April 8th and April 14th expiration. So I'll run this forward a few more candles, and it just crapped out. Now let's look at this. Let's look at this on the inverse. Okay, this is Monday close, I believe. So we'll bring this forward. And again, the red bars are green and the green bars are red. So wrap your mind around that. So what we're looking for now is a bottoming pattern. And whoa, we gapped down. And we were green, but we gapped down. Or I guess we would have actually gapped up. So this here was a great looking bar here. We're looking for a bottoming pattern. I just got confused right here. I had to wrap my mind around this again. So, uh-oh. Okay, now we knew that it retraced. And then we came back down to the $8 area. So this is 45 minutes now of downward pressure. And we put in just a little, almost a little doji bar. And again, we couldn't break through $8. So again, looking at this from a bottoming standpoint, I'm saying, hey, we've got a double bottom. We've got a little bit of a higher low here. We're going higher. But I didn't even see that on Tuesday. And I actually had orders out there. I actually had orders on LABU, and I had orders on TLRY. TLRY, I was looking out, I believe, 2 weeks. I was looking at 950 and 1050 calls. I had orders out there, but I was going a little bit above the offer because I thought if the stock moves a little bit higher, I'm going to be filled. And then I wasn't quite sure what I was going to do with the other calls, but I was definitely going to get orders routed. And then this was the end, as we just looked. And to me, this looks so much easier to recognize inverted with the chart the way it is rather than the other way. So let's just bring this forward now to the end of the week, and it's not pretty. We ought to be about finished with Tuesday here. Yeah, this was Wednesday. So Wednesday, we were lower. And let's just uninvert this now. And this was my chance right here on Tuesday. Now, back in here, you're saying, well, why didn't you sell any premium up there? I actually was short premium last week that it would have expired. It would have expired on Friday the 1st. So this was Monday the 4th. So I couldn't sell any premium back here. I was already short. So, but this was a small window of opportunity. This was a couple of hours at best. And I mean, the opportunity was just gone. And now we're drifting sideways. The volatility's out of the options. And lesson learned. And another thing, look at this. They beat earnings. I think they were looking at a negative number, and they actually made 9 cents a share. So I don't know. So let's take a look at one more. We'll look at Minnesota Mining and Manufacturing, aka 3M. I own 100 shares of this at 157.50. Now this is Friday. Well, let's back up a second. I was actually short a 157.50 put. I think I sold it. I think I did well with this one. I sold it right in here somewhere. I got a little bit of premium for it. I was able to buy back that call for 1 penny. I believe it was Thursday. I don't know. One of these 2 days here, I bought that premium back. So going into Friday, I'm thinking, hey, I want to sell a call. And I'm happy to sell the 157.50 call. on this. Well, look what we had. We gapped up, and we just crapped. That first 15-minute candle was just stunk. This is it. We got the chart scrunched up here. So then for 45 minutes, we really don't do much of anything. And then for the next half hour, bam, and we make new highs. And I actually had an order routed up in here, but 3M options are spready, and there's no getting filled at the offer. There's no getting filled a couple of pennies under the offer. And then look what we do the rest of the day. We just crap out. So let's invert this chart and see how this looks. And we'll bring this forward to, let's just do 2 days here. Okay, so this is yesterday. So, where we actually had a big red candle to start the day, inverted we're green. So we go sideways for half an hour, and then we start to put in a red candle for 15 minutes, and then we have 2 really nice red candles. And let's just wipe this part out too if we can. Nope, that's not what I wanted to do. We'll do it this way. Yeah, this is what I want to do. Now, this looks like a slightly lower low. Are we going to go lower, or are we going to, or is this just going to be a relatively smaller lower low, and then are we going to bounce from there? Well, we know that we bounced from there. And we started to bounce from there, and I believe we know what happened because we've already seen it. So another opportunity missed to sell a covered call, and at least for this day. Now, there'll be another chance to sell a covered call, but we did exactly what it looked like it could do. We just had a little bit of a lower low. This candle here was key. When we put in this green candle here, and it didn't make any kind of a lower low there, and then we bounced a little bit higher 15 minutes later, 15, 30, 45, an hour later, we went from 151.60 down to 150.83, another opportunity lost. And I really got to get better at this. Let's take a look at one more, because I had an idea here and I just didn't take advantage of it. I'm in the Bitcoin ETF BITO, and let's look at the daily. So my cost on this is $32, and I was short premium in this that would have expired on April 1st. So going into this week, I was free. I could sell covered calls on BITO, but I just didn't take the opportunity. Well, yesterday again, we had an opportunity here. Look at this run. And so what I was kicking around doing was selling the $27.50 or the $28 strike price covered calls that expire in a week or two. But you're saying that's under my cost. I said, I know that's under my cost, and that's risky business. But look what happened. We rolled over. Excuse me. Hey, I know. Let's look at the option chain. I can't go back on demand because I don't think Friday's available yet. But let's look at the option chain for yesterday, and let's look at the opportunity that was missed. Well, let's look at the April 14th and April 22 options. We're not going to need very many of them. So, okay, I'm looking at $27.50, $28. So, look at high of the day yesterday, 80 cents, and look at low of the day yesterday, 29 cents, or 39 cents. If a guy could have taken 20 cents, 25 cents out of that, sold the call and then bought it back, that would have been a nice trade. But looking out to next week here, $1.18.74, you'd have had to be more precise, I think. Even though you lost more premium, I think you might have had to have been more precise. I'm not so sure about that. the $28, which is probably what I would have done, because I would probably have been thinking, oh, this move will just continue. You know, there was only 30 cents difference there. That would have been hard to have done, although you'd be looking pretty over the weekend. And here, 93.66, same thing. So risky business, I think. But if a guy could have sat through, I tell you what, if a guy could have sat through this and still been holding and covered somewhere in this candle or this candle, if I would still have been holding, I definitely would have covered here on the green candle. There's no way I would have been holding through this one. But just for fun, let's invert this chart and see how this looks for yesterday. And let's get rid of, whoops. We'll just bring that back a day. I don't like that very well. So going forward here, but I'd like to get rid of these moving averages, but I don't want to mess my chart up. And look at the product too. It went from a high of 27, or I guess this would have been the low, wouldn't it? Now this really gets confusing. Okay, 26.99, and on the high it would have been 27.54. So that's just 50 cents, I guess. Let's uninvert that. Now I can see clearly. Okay, the low was 26.99. It got to where? Okay, that's only 55 cents. But relatively speaking on this chart, I mean, that's a fairly decent move for this product. Let's invert it. I don't know. I just didn't see it crapping out like that. Anyway, like I said, don't know if I'm going to post this or not. If I do, I may just unlist it, make it private. Maybe I'll make it public. I don't know. But I think it's just another tool in the tool belt on selling covered calls. Is if these moves are looking toppy, and I can invert the chart on a live market as well. So that's just an additional tool in my belt. You know, just take the premium. As I preach to other trader friends of mine, go back to the old game show, Deal or No Deal. You've got an offer on the table. It's a nice offer. Howie gets off the phone with the banker. He opens up the box and he says, deal or no deal. I've got to press the button and say deal on these covered calls. Thanks for watching. I'll see you next time.